We just logged 2 clean weeks of gains. Now let's see who actually trained for volatility. Last week wrapped with muscle. S&P 500 up 1.5%. NASDAQ gained 2.18%. Russell 2000 led with 3.19%. And the Dow added 1.17%. That makes it 2 straight green weeks. The S&P is now over 20% off the April low and less than 2.5% from February's record high. This is exactly why I stay invested through volatility. Volatility and risk are not the same thing. If you tried to time that rebound, odds are you missed it. Breadth was strong, rotation looked healthy, but volume still more pump set than breakout. This morning, the setup's more mixed. S&P 500 futures down 0.2%. NASDAQ 0.11%, and the Dow futures down 0.01%. Europe's flat. Stock 600 up 0.1%, and the DAX is slightly red. Asia's solid. Nikkei up 0.92%. Hang Seng 1.2%, and Shanghai up 0.35%. Bond yields are steady, with the 10-year hanging at 4.5%. The dollar's softer, unwinding Friday's move. Gold down, oil's lower, and industrial metals are mixed. The main focus today, trade. Shocker. The US and China are back at the table in London, and the stakes are high. Rare earth export licenses are front and center. China granted some approvals after last week's Trump-Xi call, but they're still pushing back on US tax restrictions. The White House has hinted if there's no deal by August, higher tariffs are coming. Meanwhile, Europe is negotiating with China on high-tech product access, and India is working with US officials on a broader trade agreement. Both are trying to avoid tariff fallout and supply chain bottlenecks. Last week's job data showed strength without overheating. 139,000 added to the payrolls, wages up 0.4%, and the unemployment rate held at 4.2%. That really just reinforced the Fed's wait-and-see mode. No rush to cut, no reason to really hike. And here's what I'm watching this week. CPI on Wednesday. That's the big one for inflation. If it comes out hot, rate cuts get pushed. PPI on Thursday. This shows input prices for producers. If costs rise too fast, they either eat margins or more likely is they pass them on to us. I'm watching for any signs that producer level inflation is reaccelerating. Consumer sentiment comes out Friday, tells us how confident people feel about spending. Lower confidence, slower economy. Also important, there's $120 billion in treasury auctions this week. If demand is weak, yields spike and stocks will feel it. If demand is strong, that can ease pressure on rates and support risk assets. Final thought, the test isn't whether we rallied, it's whether the market can hold gains as the data hits and the trade talks unfold. Breadth is improving, rotation's broadening, but this week will tell us if there's a follow through or if we fade the pump. Drop a like or hit a follow if you want to stay sharp before the open. See you after the close to see what actually happened. Let's get after it. God bless.